With the price of Bitcoin up 10% in the last 4 days, it's time to look into the charts, understand the macroeconomic environments, and form a plan about what's going to be happening. Okay? So you're joined by me, Isaac Finance, and we're going to be looking into the charts. We're going to find the best possible explanations for what's going on, and we're going to sort of create our plans and understand the best we can to our ability. Because obviously you can't know 100% in the market, but you can formulate probabilistic improbable ideas of what's going to happen. So that's what I'm going to be here today. And we're going to be incorporating a mixture of macro and technical levels to sort of form a based plan for the coming few months, weeks, and obviously to the more shorter term time frame people who are looking for those more immediate moves in the market. All right, so the first thing we're going to be covering is the macro side of our analysis in this video. So I would like to start this video thanking Ainslie, the Ainslie Group, for providing me with the information about the global liquidity cycle. This is something that I've recently come into, and specifically from Tipper Analytics. I will link his Twitter handle down below, but I've learned a lot about the global liquidity cycle through the Ainslie Group videos on YouTube, and it's been a very helpful tool to understand the more macro side of the markets. Now, before we sort of dive into what it is and how it looks in this chart, I feel like I should probably give you a definition and how it works, and understand it more before I just show you a chart. Okay, so we're just going to hop to the next slide, and that will be the explanation of it. So imagine the global financial system like a giant pond. So just picture that in your head. There's going to be a lot of analogies in this video and sort of ideas that you can visualize so you can understand this. The liquidity is the water in the pond. The more water, the easier it is for things to flow. So when things can flow, money gets loaned, investments are made, the economy hums along. So global liquidity isn't just cash, coins, and bills. It includes other sources of funding, like central banks adding or removing money. Think of pouring or draining water, loans from banks, and non-traditional lenders like fountains feeding the pond, moving money across borders. So think of rain from other ponds, companies using their own cash. Think of collecting rainwater. So this definition focuses on where funding comes from, the more asset side of it. So it's checking like the pond's resource, not just checking how much water is in the pond. Now, a cautionary thing to remember is liquidity is generally good, right? But too much can cause bubbles and crashes. So this is what happens when we reach those peaks in our cycles. And I'll go over the global liquidity cycle in the chart so you can more visualize it better. But basically the more when there's an oversupply of liquidity, it will generally end in a bubble, and then the crash comes after that. Okay, so the less liquidity can slow things down, making it harder for businesses and people to borrow money, more so bringing hard economic times. So central banks manage the pond by adding or removing water when needed. Now they do with very common ways, and I'll just quickly run into that. So ways of increasing liquidity are lowering interest rates. This makes it easy for people to borrow. Therefore, more money is in the market when people start borrowing more money, and tends to be the case. You've got quantitative easing. You've got reducing bank reserve requirements. So banks have to have such large reserves, which obviously since the 2008 financial crisis, they've had to tighten up those rules because obviously there's a big story with that. And I'm not going to cover that in this video. But yeah, removing water and decreasing liquidity is literally just the opposite of those tools that we just looked at before and what the banks use, okay? So I would like to go back to this chart, which is the Global Liquidity Index coupled and overlaid with Bitcoin. And this is the January 2024 report. This report is actually on YouTube. The link's down below in the screen right now. You can see Ainslie Bullion YouTube. You can check that out for the full video. So I would just like to point out when the global liquidity cycle peaks, this is generally where you start looking for the tops of the markets. So you got the tops for gold, you got the tops of Bitcoin, and this is when the money supply is starting to roll over, as you can see with this green section. When you're in the green section, you start to look for selling opportunities. And you can even start looking once you hit that 70 barrier, that 70 line, sorry. And you're going to match this with other economic and macroeconomic cues at the same time. But it's definitely a really good tool to use, okay? So as you can see here, we were going up. And while we're still in the green, we had our first top. Now, a lot of people are saying that this second top was induced by stimulus checks from the low here. And so that's why we had that low potentially. So this could have been the real high, And this was sort of the fake high that was provided via stimulus checks. As you can see, there's a large liquidity bump up there, and then we roll over towards the end here. So the good thing about the Bitcoin one is in the global liquidity cycle, it front run. So the global liquidity went ahead of the Bitcoin price in terms of which one peaked. And that gives you some good insight into the next cycle, what could potentially happen. We could potentially see a peak in the global liquidity cycle and Bitcoin may continue to rise. But obviously we're going to be looking at, euphoria, candles that are going crazy, and other metrics like the previous bull run to give us those signs. And it sounds voodoo and sort of like gut feeling. And I think to a large extent, it is that, a lot of people with experience have a feeling and the market's heating up. But I feel like we can use tools to our side to sort of get roundabout entry and exit points in the market. So I would also like to point out the bottom here, as you can see. Now, this is the lower side of the market. So this is 2022. This is when the global liquidity was very low. And as you can see, subsequently, we are starting to rise. So that obviously timed the bottom very nicely. And I know probably a lot of people are going to say, well, what's the bottom? It's got a number metric of 10, 20, 30, all the way to 100. How do you decide what's the bottom? Maybe 20 could be the bottom, maybe 10, maybe 5. Now, from my current view on the global liquidity, I would be looking at the colors and looking at around about regions, not so much like the exact low. And I don't even feel like it's worthwhile trying to catch the exact low because you end up missing opportunities, in my opinion. Rather, just start DCAing when you see liquidity when you see it start to hit those red zones, and then exit out slowly once you start to see the greens. But greens are a lot harder to sort of get than reds, as you can see. But yeah, we can see that right there. It was very timed nicely. All you had to do was start buying within this red zone and you'd be in massive profits by now. So that is this first chart. And the next one's a bit zoomed out, I believe. Yeah, zoomed out from the previous cycle. So as you can see here, our top was our bottom for the 2019 cycle was actually put in very nicely. And going back here, it's a bit more choppy. Now, obviously, the cycle low in 2015 was here, and that is more tricky to sort of gauge. And the top was here. And an idea which I've heard is it's going to be more sort of larger swings in the market and more predictable because the economy is becoming more over leveraged with debt. Therefore, the cycles are more, exaggerated in terms of the liquidity coming in and out of the market. So that's what I'm primarily hearing. And looking at this, it does look a bit. So when do you enter? When do you exit? Because this wasn't like this low here wasn't in the reds, right? But this one was, and this one was. So, going back then, it'd be like people could say, well, what's going on? And honestly, that section is hard to know. And I feel like that was a hard, spot to gauge. This spot, you saw a decline and a rise. And again, it wasn't in those 98, 70 range or 10 or that range, but yeah, so it was definitely a harder range. I guess the range here was tighter as the market was less leveraged back then. Yeah, from a macro perspective, that's what we're looking at from the global liquidity cycle. Now, also regarding interest rates, we're seeing a lot of mixed signals from news sources. We're seeing some saying there's a pushback, some saying they're going to happen soon, and a wide array of different information coming out of different news outlets. So it's definitely hard to know what's going to happen on that front with interest rates. We would like to see a cut potentially, but we'll see what's going to happen. And honestly, we don't know how the market's going to react, or if it's already priced rate cuts in. It's very hard to know. But what we can do is give probabilistic ideas and plans for what's going to happen. This is where the fun starts. Let's get into it. All right, so we are on the monthly level right now. And from looking at this right now, we're seeing a large rise in Bitcoin on the monthly. We're just seeing a lot of consecutive green candles, approximately around 153 days worth, and that conglomerate that into months. 1, 2, 3, 4, 5 consecutive, and then we might be forming a 6 up here. But the month obviously has a lot more to go. But yeah, let's just start marking our levels of interest, okay? So in terms of monthly levels, we got that one, that one, that one, nothing. I'm going to chart out right here. Weeklies, we've got levels of interest, and I'm going to be highlighting for you today. Okay, so a local bottom low from the candle close of this to the candle open is going to be our weekly here. We've also got a weekly up there, which would also coincide with a SR level. If you can pull that back and see, we got that low there, that high there. But yeah, it's a region of interest per se. It's not necessarily an exact level you'd be planning to take a trade, but just regions of interest. You got that, and now we got dailies in a second. I'm just going to see if I can find any more resistance levels. So we got that one, which is there, which is already washed through. We've got this one down there, which is already on the lower side, so I'm not going to bother marking that right now. We've got that, which is already there. That one there too. Okay, so running into the daily time frame. Actually, before I do that, I want to show you the volume nodes real quick, just so we can see what we're looking at in the volume perspective. We got on Binance. Let's see. Oh, this chart's not doing it justice, to be honest. Let me check Bybit. I know Bybit's got a really good one with the volume profile. Oh, it's all different, I guess, right? If we can just go here, volume hump there, volume hump there too, there too, there too. So a lot less as we're going. Yeah, okay, interesting. And then I'll just quickly check the index, which we can just use because that's a conglomeration of all the Bitcoin different charts. Yeah, so an interesting point to note out is a lot of times you see rejections at liquidity, not liquidity, but levels where price is traded a lot. Now, this is a volume profile. And what it means is it's checking the levels where price is traded the most. So you've got one right there. You've got one right here. You've got one right here. You've got one right down there. You've got one up here. You've got one down there. And you've got some like up here, okay? Now, what's really cool and interesting about these levels is you tend to see rejections there. You've got a rejection up here. You've got a support back here, which is going to that previous support. You've then also got rejection up here, rejection up here. Now, this second rejection that we've seen on this bit was potentially taking out this high and taking out liquidity, creating false hope before a down flush, you know, really wiping out those bulls, those early bulls, and the weekends, I should say. And then you've got, yeah, another set of resistance going into resistance. And you know what they say? When you're trading into resistance and you're staying under it, that's a bullish sign, and you break out of that pretty quick. And then you bounce in, bounce up, go up to that region, come down, and back up there. So we can see that. That's really cool. And you know what's really cool? Look at that bottom. Look where the price bottomed there. It bottomed straight at that liquidity, that POC level there too, which is just frighteningly cool, from my opinion. So we got that there, guys. But I don't think I want to highlight that one. Let's go back to our Binance chart. Yeah, cool. So we've also got liquidity levels up here, which are like swing failure pattern levels. I'm just going to highlight that there. That's the previous high. We've also got that one, which was already hit. I just want to show you how the reaction was off that. We'll know how that was already. But yeah, we took out that high, which was the global zone of the 6-1 fib, which saw a subsequent flush down, which it always does in previous charts. I've drawn out charts before. If you go back from all the previous charts, like Bitstamp and different stuff like that, you can see that, for example, you've got the high to the low. I'm on a log scale, by the way, so the proportions look a bit odd, but you can see we fell right in the golden zone right there. And, you know, right now we're falling into the golden zone right here, which is just another crazy thing. Another case of somehow the technicals work in a way, which is really interesting. But obviously the macroeconomic environment, which the global liquidity is the driving force, and people like to trade and make profits at technical levels. So yeah, anyway, we have, those are my levels from a while ago. Let me just go to this one. Yeah, okay, cool. So what are we looking at right now? Let's try and formulate our plan. So I'm looking at this. So I'm going to draw this channel. Now, opposed to a normal channel, I've just got it to track the 0.5, 0.75, and etc. like that. So we can see what's going on. And we'll just have a look at our volume profile from, we'll check the whole thing first. So obviously the majority of it is ranging in here, which is $44,000 to $41,000. We're broken through that completely. To me, this is much more bullish. I'm in much more bullish territory than bearish. Now, that doesn't mean we can't reject off here. And I'm not saying we're going straight up right now, but I'm thinking it is much more likely we find support at either here or here and then have a bounce back up, opposed to just falling straight through. Now, that's definitely a possible outcome, and it could definitely happen. But what I would like to see is it break down here and break down into that and then come back in through that again. Now, that's going to be quite hard. Now, and the reason I don't believe that's going to happen just yet is I would like to see this top taken out. I feel like there's a lot of liquidity up at this top that was going into the ETF. You had people who were going crazy long in that region, and you also had a lot of people who were taking shorts. So a lot of people flipped their positions and took shorts up here, and they're going to leave their stop losses up here. So if you can wipe this region, we could then see a downturn, or a local downturn per se. I'm just spitting out ideas. These aren't necessarily proper trade plans, but these are just projections of what I think can happen. Another thing I like to point out is how nice has it bounced off these levels. So you saw price hit that low, come up, hit the high, come down, come out, come up, and now we're trading in this region here. So we can potentially see that to the high there too, which would be a nice thing to occur for me, in my opinion. Another one I was doing was down over here. We had the chart like this, and you can see how, I'll just go on a small time frame. All this is basically a channel, right? So normal channel just uses this. You've got a parallel channel just like that, right? But it just has more levels in it, so you can see where price is bouncing. You're seeing a lot of price bouncing up in here, coming up, coming down, coming up in that region. And a strategy which I like to adopt is look to buy in these regions, look to sell in these regions of your channel. Okay, so a lot of guys just blindly look at the chart, and they'll look at the chart like this. So I'll just show you what I'm looking at. They'll go on the chart like this, and they'll see a green candle, and they'll be buy, 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 buy. Now, obviously, I'm talking about technical traders, not long-term traders. If you're a long-term trader, DCing anywhere within reasonable low is completely fine. But if you're doing 100x longs, 50x longs, you don't just buy when you see a green candle. You get smoked. You can make money, but you will get smoked most of the time because you'll probably be buying right up here, to be honest with you. Yeah, the best metric is to draw out a channel of some sort and look for the lower regions, and then couple that with volume, information, and data. Now, what I would like to point out with this level we had here is we also saw, the reason we saw such a large bounce is we also were seeing the divergence on the CBD. So it was being suppressed, and then we had that giant rise up, followed by little single prints within this region. That's why we saw a large increase here. So if I go here like that, you're going to see within the volume profile that there's a large gap here which has no volume. So price just easily slides up through there. And then obviously we had some volume here, and then we've seen a subsequent rejection up there. But that's that for now. So what would I be looking at for a potential long opportunity? I'm going to point that out to you guys right now. So for a long opportunity, there's really just a few things I'm going off. And there's not much I have right now. So you don't know if that's going to be the top, so you can't really draw that. But for a potential long opportunity, what I'm going to be looking for is, I'm going to be looking for a rollover with the market cipher or any indicator, MACD, RSI, anything of your choice. Would look something like this, which should bring price somewhere around 44-ish. Anywhere, it doesn't matter the exact price, but what we're looking for is that volume, that to come down. And then I would be looking for potential buys around here. In my opinion, you don't like to buy in green candles. You like to buy when it's red. That's the philosophy which you need to switch your mind around. The moment you see green candles, you buy. So you could be buying up here, and do you want to buy up here? If it was spot, I would say go all for it. But in terms of derivative positions in the futures market, you can easily get smoked. So it's best to be looking at regions on the lower side. At least be looking at this and be like, okay, I'm going to wait till it's like here. And I could look really silly in this video if price just pumped up, right? Which it could easily do. But if you look all throughout history, it's better to not long into upper regions of resistance. Now we're seeing a potential resistance level up at the top here. Now, I'm not going to sit here and say I'm smart or anything. I could be very silly saying what I'm saying, but in the long run, it would play out more in my favor. And I've analyzed the markets enough to know this and have that confidence behind myself to say it's better to be looking to place long when the market's going down, especially while we're in a bull market, right? When you're in a bear market, you're going to switch your philosophy, and it's not going to be this. I'm not going to be looking for long opportunities as consistently as we're in a bull market. We're in a bull market right now, so you got to bias yourself to those bull positions, right? You can't be sitting here thinking we're just going to keep going down. But yeah, so as I said, I'm going to give you some regions. I'm going to give you around 42-ish, 42,800, 44,300. And overall, this region is what we're going to be looking at for interesting support range, in my opinion. Now, I know you're going to say this is a very large range of $5,000, but within here, we have our levels. So we have this one, and these two, which coincide nicely. And we also got, yeah, cool. So we'll definitely be looking in this region, and what we're looking for in terms of a market cipher or, RSI would be that rollover, and then we got that buy signal right here, and then we buy in. So it looks something like this. But, you could be completely wrong saying it's going to happen. It could just go up right now, and I'd be looking silly. But in terms of what's going to be a safe trade, in my opinion, that would be the best trade to take. Now, in terms of upside levels for a short, we've got some juicy levels above. We've got our swing high up here, which is liquidity region, so SFP swing failure pattern. And then we've also got our weekly level and another swing failure pattern. So this is a big range of 7%, $3,000, which is going to offer us a large resistance, in my opinion. But I think the biggest resistance is obviously the golden zone, which we're at right now, because previous charts have gone down way more than what we've gone down. Where we've gone down, fair 21, other charts have gone down 30% in the previous cycle. So definitely be looking for that. But other than that, in terms of levels to the upside, I would not be looking at anything else than that. Now for shorts, really you'd be looking at this one as your first short opportunity. In terms of a local short, you could short this region here, but I'm not really confident shorting this either, because I've also found that price likes to go to liquidity regions. So, up or down right now, we're in an indecisive zone. Nothing's been printed. You like to see levels of support or resistance be hit, and then, green dots or RSI flips or stuff like that occurs, especially in the futures market, because liquidations can occur quite easily. Spot positions, if you really believe in the project you're buying in, then go all for it. But yeah, so we're looking at around 48,900, 5,700, and then 42,300 for our short positions. I will be posting further videos and updates on those regions when a price hits those or downside regions, and I'll let you guys know what I'm thinking there. As I said, these are regions, and what we like to look at is the reactions at the regions. So if I just see price go like this through the region, I'm not going to place a short. And if I don't see any sort of struggling, then there's no short being placed. If I see no support like that, there's no support. I'm not going to place a trade. Okay. Like I haven't shorted any of this up here because there's been no sign of weakness. And, I placed a long here and I've ridden it up and I'm keeping that position going. But I'm not going to place a short right here because I don't see any sign of weakness occurring until we hit my regions of resistance. Then I'm going to be placing shorts, and vice versa. If we start to break down from here, I think I had the other volume level here. If we start to break down to this region, then I'd be starting to close the whole position down 6% from where it is. Then I'd be like, okay, well, if it breaks down in here, obviously this could offer us support for a further bounce up, and then you could probably sell here if you believe it's going to go down. It's all about playing your cards well and when you think it's going to be most likely. So I'm going to pick what's going to be most likely in the market right now. I'm personally expecting a little higher. I would like to see this $50,000, well, not 50,000, but 49K taken out. I would like to see it before we reverse. Preferably, it would be the best outcome, in my opinion. If for a little reversal like that, or we just cut straight through, hit the weekly, and come down. But obviously, these levels, in my opinion, it's not just going to cut straight through like that. These are strong levels. We're going to see resistance here. We could go up, range in here, up, range like that. For now, I'm staying more bullish. We are obviously seeing our momentum wave start to have our large peak into the high. We've got the white line, which is saying oversold. You can have positions like this where it says oversold, but for a while. But I'm looking at this technical region around 59,000, and I want that to be hit. In my opinion, I feel like it's going to wreck a lot of retail traders. So that'll be a good income. That'll be a good outcome, in my opinion, to wipe out a lot of people. Sounds really bad, but that's how the market works in this environment. Before a subsequent pullback of some sort, and then from there we'd evaluate. This is the short-term perspective, guys. Long-term, I'm bullish on Bitcoin. We're entering the election. Donald Trump's elected. We could see the prices rise. I'm not going to be sitting here saying I'm expecting like $200,000, but we could definitely be seeing all-time highs into like $70,000, and then from there we'll be evaluating what's going to happen. But those are long-term macro environments. We've looked at the global liquidity. It's trending up. We're going to be seeing prices rise in the long term. So long-term hodler will always outperform the short-term traders. So that's the funny thing about this. Anyway, guys, I hope you guys enjoyed the video. Check out the Ainslie Bullion content on their channel. It's some great stuff. There's really good insights for you got gold, silver. And check out the platform, the website. They got good stuff on there too, alright? I hope you guys like this video. Mark down those levels. I'm sure they're going to be offer some resistance and support. And I'll keep you guys informed, alright? For now, I'll catch you guys next time.